G'day everyone, welcome back to the weekend general update. And the Australian market is pretty ordinary at the moment. It's a bit of a frustratingly flat period in Australia, but overseas, particularly in America, the markets are still strong and heading up. So let's have a look at the action from the last week. The S&P ended up being down 1 point on the week. It started off with 3 or 4 days down in a row, and then it steadied and then had a strong reversal on Friday night. So there's really no change to the overall rally in America. As I said, weakness early and then back to strength. And we've still got this same situation where the Russell 2000 for small and mid-cap stocks and the NASDAQ are stronger and outperforming the S&P. And as I've said many times, they're generally the leading indicators. If the market is going to top out and go into a correction of a bit more significance, then the last stocks to fall are the big ones, the ones that make up the Dow Jones and have an influence on the S&P. And you tend to see the Russell 2000 and the NASDAQ index starting to roll over first. And not only are they not showing any signs of weakness, they're actually stronger than the S&P. So that has really important ramifications for the US market. But having said that, and the fact now that it's quite possible we might rally all the way through Christmas, the reward for risk remains unattractive, as you'll see from the chart. Yes, there might be some more upside, but the higher this goes, the more likely it is we'll get some downside. Now, it's not to say that you shouldn't trade the market. I'm just saying that the reward for the risk that you're taking is unattractive. What you want to be doing is to be trading actively when you've got 3 or 4 chances of upside and 1 chance of downside, whereas I think at the moment it's probably swung a bit the other way. So let's have a quick look at the S&P index. So you can see really over the last 2 to 2.5 weeks, there's been very little change. It's been locked in this little corridor between 1790 and about 1810. But really no signs of rolling over yet. And as you can see, quite a good night on Friday night. It's all-time highs, so we don't have any particular targets. It could go up another 10, 20, 30 points. But what you will notice, however, is that the index is significantly above the moving average. And it's about as far above the moving average as it ever gets. And it's actually been holding up there now for quite some time. You can see these other occasions here in May, again in August. We really had, and then again in September, the price or the index got significantly above the moving average, but then it almost immediately pulled back for a couple of weeks. This time it's been significantly above the moving average, but it's just hanging there. And it's a most unusual chart pattern, and it just really shows how much momentum is in the US market. There's really no desire to be taking profit there at all. So great deal of strength there. Let's turn to the Australian market. It's been really flat and disappointing, and our index was actually down 134 points on the week. Dragged down, of course, by the banks. The materials sector, BHP, Rio, did better than the banks. They were still down a little bit, but certainly did a lot better than the banks. And we've just got this general low liquidity across the whole market that really started about 4 to 6 weeks ago. And it really is impacting the entire market space at the moment. I think one of the reasons is the falling Aussie dollar is making the major stocks that overseas investors and hedge funds would invest in, it's making them look very unattractive, because you could make a bit of money on the stock, but you're just going to lose that on the currency, or possibly even more. And with the RBA so focused on getting that dollar down, I think overseas investors have just lost interest. So we're obviously getting some liquidation. We're not getting fresh money coming in. And one of the realities about the Australian market is that we really need that overseas money to drive our market higher. But there's also very poor business and consumer confidence, and I think that's just working its way through all parts of the Australian economy, and including the stock market. So it's not a particularly exciting situation at the moment in the Australian market. And even the best small caps that are been terrific long-term performers, have really strong outlook for the next couple of years in their particular sector, that are cheap, that are paying a very attractive dividend. Even those stocks are under pressure. So it's just, it really is quite a surprisingly weak period. So it just means that you need to take more care than you normally would. Let's have a quick look at the finance index to start with. So you can see quite a strong week down, a couple of really big days down. There was a little bit of a turnaround on Friday afternoon in the Australian market, and with the strength in the US, that may turn up on Monday morning. But what we've been seeing is this pattern where the Australian market opens reasonably buoyant in the morning, and then within the first hour, the selling comes in and it just runs out of steam. And that's happened almost every session in this last week. The only exception was probably Wednesday, and then to a degree, a little bit of strength came back in on Friday. So hopefully we'll see a bit of a bounce in the market on Monday. Let's have a look at the ASX 200. It's pretty much a reflection of what has happened in the banking side of things. Turning now to gold. Again, gold's still under pressure, down by $25 on the week. It's looking likely that this might be a double bottom formed around 1191, but I wouldn't be surprised the way gold's going at the moment if there were still lower levels below that. So there's still nothing positive in the gold sector. There's nothing positive from gold stocks, either internationally or in Australia. So my strong advice is just leave gold alone for the time being until we actually see something positive. Copper was steady. Other commodities did better. Copper was steady at $3.20, and oil regained some strength back up to 97 as well. So some better signs there. Let's just have a look at the gold market. There's the price of gold. As I said, slipped $25, and we've got this double bottom setting up down here at 1191, which was the low that was formed on the 28th of June. If we pan back a bit further, you can see if that level doesn't hold, then we could be heading down to around about the 1,000 to 1,050 mark would be a possibility, and that wouldn't be at all good for gold stocks. So the risk and reward around gold stocks is just not attractive at the moment, so stay clear. This is silver, very similar pattern to gold. Also perhaps heading for a double bottom around the $18.30 mark. So that's precious metals. There's the copper chart. It's just been stable now since the middle of the year, between 320 and 330. Hasn't really moved very much, and that in itself is a pretty reasonable sign of what's going on around the world. You know, the global economy is growing. It's slow, but it is growing, and so the demand for copper is still staying up there. So from an overall strategy point of view, a continued rally through to Christmas is now a possibility. I would have said, or I have been saying up until recently, that we would almost certainly get some sort of correction, even if it was only for a week or 2 weeks. But look, we've had 3 very minor days down in America, and then it's straight back up again, and that's happened a few times now. So you'd now have to say, with really only 2 trading weeks to Christmas, that this rally could continue all the way through to the new year. But the Aussie market is lagging badly, so that means you've got to take a lot more care in the Australian market. Now's the time to be really highly selective. You don't want to be just buying anything because it's down a little bit in price. What you need to be doing is be very clear about what it is that you need in your trade setup, and you need to be ticking as many boxes as possible. You don't want to be just taking average trades at the moment. You want to be taking the very best trades that you can, based both on fundamentals and on technicals. I wouldn't just be trading on technical setups at the moment. I'd want as much as I can possibly get, and that means understanding where that stock is in terms of fundamental value as well. Very, very important at the moment. So if anyone wants to have a chat about the market, about how I might be able to help you improve your results, there's my contact details. Always happy to talk. So please get in touch if that's the case. That's it for this week. Cheers.